The President of the United States makes $400,000 a year. In 2025, Donald Trump earned $2.4 billion. This chart compares the percentage of personal wealth growth for recent presidents during their time in office. George W. Bush saw a 35% increase, and Barack Obama grew his net worth by 47%. Donald Trump's wealth grew by 183%. For decades, incoming presidents placed their assets into a blind trust. The standard practice was to hand over control of investments to an independent manager, ensuring executive decisions couldn't be influenced by a desire for personal profit. Jimmy Carter famously surrendered his family peanut business when he took office in 1977. Past administrations went to extreme lengths to ensure their private businesses were entirely separated from their public duties. That separation is gone. The current executive branch operates without a blind trust, meaning the president maintains direct ownership of a massive, active business network right from the Oval Office. Without that historical barrier, the lines between public policy and private income intersect. To understand exactly who is supplying this new wave of executive wealth, we have to audit the ledger. A baseline portion of the president's income comes from his legacy real estate portfolio. Properties like Mar-a-Lago generated over $77 million in 2025. Domestic luxury properties and golf resorts provide steady revenue. The Doral Resort in Miami alone brought in over $120 million. This graph tracks foreign licensing revenue. After returning to office, income from international developers spiked 900%. That surge represents over $117 million, concentrated in new developments negotiated with partners across the United Arab Emirates and Saudi Arabia. Owning a golf course in Florida generates standard hospitality revenue. Licensing a name to Middle Eastern developers for hundreds of millions creates direct financial ties to regions dependent on American diplomatic and military policy. Physical real estate is no longer the primary driver of this wealth. Over half of the total income reported in 2025, more than $1.4 billion, came from the cryptocurrency sector. 3 days before taking office, the president launched the official Trump meme coin. This is a highly liquid, speculative financial asset, built with a strict token supply schedule and baked-in trading fees. This chart illustrates the token structure. Holding companies collected guaranteed payouts, generating $635 million in royalties. While creators secured those funds, retail buyers absorbed the risk. Blockchain analysis reveals these buyers suffered a combined $700 million in losses. The structure guarantees that wealth moves in one direction. The executive branch profits securely from a speculative asset, while retail citizens take the financial hit. The largest single source of digital income came from World Liberty Financial and its USD1 stablecoin. This venture generated roughly $800 million for the president and his family. This flowchart maps the project's capital. An Emirati royal group used a sovereign wealth fund to inject $500 million into World Liberty Financial. That exact liquidity was then deployed to facilitate a multi-billion-dollar investment into Binance, a massive cryptocurrency exchange. Shortly after that capital transfer, the president pardoned the co-founder of Binance for federal financial crimes. At the same time, the administration backed the Genius Act, a legislative push specifically designed to establish a federal framework for dollar-backed stablecoins. Federal legislation and executive pardons are now intersecting with private financial networks. The people making the rules for the digital asset market are simultaneously collecting hundreds of millions of dollars from it. The administration has defended these gains by pointing to a strong economy, stating that a rising stock market is generating wealth for the entire public, right alongside the executive branch. The ledger shows an entirely different distribution of capital. The data reveals guaranteed, centralized executive wealth extracted directly from digital assets that left public retail buyers hundreds of millions of dollars in the red. The historical boundaries separating domestic policy, foreign diplomacy, and the commander-in-chief's personal bank account has been permanently erased. A foreign investment, a presidential pardon, or a regulatory bill no longer acts strictly as national policy. Decisions made at the highest levels of government now carry a billion-dollar impact for the person signing them into law.